So we've just spent the opening making everyone feel depressed and probably getting them to dust off their Robinhood account. Open up that app. Let's talk about some I guess bullish things that are happening in crypto.
Money, power, money, power,
some of this pertains not just to crypto, so you could argue like a lot of what I say is applicable to risk assets broadly. Fine, but we'll get into some like crypto specific things in a bit. But starting off from a higher level, it does appear that like liquidity conditions are going to be improving. Again, this helps all risk assets, but as has been noted by many people, including a lot of TradFi people, Bitcoin and crypto are more sensitive to liquidity than even equities. And so liquidity improving would have a more outsized positive effect on crypto than it would for other things. Why is liquidity improving? Well, QT, quantitative tightening, is ending. Apparently, it officially ends December 1st. So says Arthur Hayes, and several other people have kind of echoed this. Meanwhile, CME future volumes for crypto are hitting new highs, and the market is repricing a December cut. This has been like a weird phenomenon for the past 2 months, where I honestly, Graham, I can't remember this year where we've seen such wild swings in the prediction of a rate cut, where it was so high and then it went down to like 30% like a week ago in terms of will there be a December rate cut. And now, where is it now live? Is it like 80% again?
It's above 80%.
That's, 83. I mean, it's just that, I mean, these kinds of swings are wild. Just as an aside, this is, however the Fed is messaging, this shows that they're messaging it poorly, right? They don't want these kinds of wild swings. So whatever the heck they're doing, just in the past couple months, the past month, they're doing it wrong, right? Like they're supposed to be kind of smoothing out and calming markets, and to have these kinds of crazy fluctuations and then seeing the kind of cascading effects from them. This is not what they're supposed to do. So
yeah, well, I think the market has sort of realized that the jig is up. Nobody really believes. Everyone knows that the Fed, what their job is to try to assuage volatility, make everyone calm, and the market sort of just sees through that now, and they don't believe anything they're saying. I feel like that's part of it.
Yes, that's probably part of it, but also apparently I read from several financial people I follow that they think the biggest issue is that they're now oversharing. Like all of the Fed governors are going out and talking too much, and maybe the markets are not used to them being so kind of talkative, and that's causing markets to swing wildly as different people say different things, and so then they some of these people think that they need to just kind of go back to what they used to do, which is talk way less, and only speak at these kind of
there's symposiums.
These certain like predefined dates that are given out a year in advance. In any case, looks like there's going to be a rate cut. And so then markets, which had been repriced lower, right, are now repricing higher. So again, liquidity increasing. In addition to this, you have institutions, traditional financial institutions are steadily marching into crypto. They are buying Bitcoin. They're mostly buying Bitcoin and ETH and a little bit of the long tail assets like Solana, which had, I think, up to 18 consecutive days of inflows into the ETF. Really, really good.
Yeah. We also, of course, had Harvard endowment revealing from their filings, their most recent filings, that Bitcoin was their biggest addition to their portfolio in the last quarter. And it's like now constitutes, I think it was about 1% of their entire endowment.
Yeah. So institutions, as we talked about last week and the week before, they're not buying like scared little paper-handed retailers. They're buying slowly and methodically. And connected to this, you have strong earnings in banks. You have strong earnings in equities like Nvidia, Google, things like that. And as one macro analyst described it, it really is still kind of a Goldilocks setup right now into year end. It's not too hot, not too cold, kind of just right for risk assets. Just as a little conspiracy theory, I don't know if you saw last week where Google CEO came out and said, AI might be in a bubble. We need to be careful. Did you remember that news? And then it caused AI related stocks to kind of tumble like 3 to 5% or something like that.
Yeah, and then there was a parade of the AI tech luminaries like going out on all the shows, on all the media, saying, no, don't worry, it's all fine.
Yeah, but to me, so someone asked me like, why would Google do that? Why would the Google CEO do that? Half their business is AI, right? Their future is AI, and I personally think you have like Sam Altman earlier this month making the markets queasy. You had Google CEO talk about AI and how like, oh, we might be getting too hot. I think they're trying to pump the brakes a little bit, right? To kind of deflate a little bit of the speculative bubble, knowing then that it can kind of reflate at a more healthy pace. Anyway, that's my conspiratorial theory. They're actually trying to talk markets down a bit for the interim, and I think it's had the requisite effect that they want, which is to kind of cool the speculative fervor, and then they can kind of juice it up later. Anyway, conspiracy theory on my part. Yeah. All right. Now, the important takeaway here is, though, that as we've said before, TradFi this year, 2025, has been the marginal buyer, and they continue to be. That means Bitcoin and Ethereum, and to a lesser extent, maybe Solana, XRP, but mostly Bitcoin, will do well and will continue to do well. But all the other alt complex, every episode we get people asking about, what about alt season? What about meme coins? All that institutions can't touch. And even when they can touch, which is not very many of them, they don't want to. It's way outside of their risk purview. So you kind of have this bifurcated market within crypto, which is these majors are doing reasonably well, even in this drawdown, and they will do well going forward. This alt stuff is just not going to do well, and it hasn't all year. So pretty much the advice would be don't buy it, right? Don't buy these meme coins, don't buy alts, because the only people who are buying them can't touch it. Or only buying crypto. Yeah, can't touch it.
The only people who are buying can't touch it. This might be a perfect transition into the Hasib article, David.
All right.
So Hasib Qureshi, Dragonfly Capital, and host of Chopping Block podcast, an excellent podcast. Also, friend of Token Narratives podcast. I've had him on twice.
Boom. That's right. Great guy.
Incredibly well-spoken crypto insider VC, right? And sensing the depths of doom that crypto Twitter has become, and the sentiment is at all-time lows. Lower sentiment, by the way, now, if you believe the fear and greed index, lower now than like in the aftermath of the FTX collapse.